Baby Rexa, Flojo, Florida Georgia line, and meant to be on Magic as we now hit 25. Away from 9 o'clock on our computer screen here, and I'm checking. It's the first day of spring. It is also International Day of Happiness, and we've got a happy fella in here with us now, Mike Barrett. Mike, did you also know today, the first day of spring, is also Won't You Be My Neighbor Day?
Oh, Mr. Rogers.
It is, exactly.
50th anniversary, I believe, yeah. I
Yes.
actually loved that show.
I did too.
Yeah, it was one of my faves. So,
welcome
won't
to
you
our
be,
neighborhood.
Won't you be?
My neighbor.
And he couldn't sing, but I didn't care. I loved it.
I can't sing. I can't carry a note in the back of a pickup truck. All right, good policies. We talk about it here every Tuesday morning here, and I hate insurance, by the way. No,
Have a good day.
And
See you later.
I don't mean it that way. Most people don't like it because it is necessary if you're going to have a car in the state. Nobody can justify it because they very rarely use it.
Mm-hmm.
Okay, so they're like, oh man, that's $500, $600, $700, $800, whatever a year. I could be using for something else, but where would we be without it?
Exactly. Look at it this way. That's $500 or $600 a year that you could be putting somewhere else. Yes. Have one loss. And I'm talking one loss in your lifetime. Will really, an insurance company will always pay you a lot more than you've ever paid them.
Yeah, of course.
So the insurance is the transfer of risk from you to an insurance company. And that is huge to remember. Huge.
It is, like you said, if somebody hits a $45,000 truck and you've had insurance for 5 years and you've been paying in whatever,
Yeah.
you come out anyways. One of the things that I can't stand about it, and I can't wrap my head around it because I am number than a box of rocks. You've known me for years, okay?
And I wouldn't have said that, but yeah.
Well, no, it's true.
I thought it, but I never would have said it.
I can't wrap my head around it, so I always have to ask questions. And the one thing that I don't understand the most, okay, besides the fact that it changes my payment, is a deductible.
Good question. Deductibles are fun.
All I know is that means that something's coming out of my pocket. But what does it mean? What is it? What? Talk about it.
Sure. So deductibles apply to a homeowner policy, and deductibles apply to the physical damage portion of an automobile policy. So the comprehensive, which is also referred to as other than collision, it's got two names, depending on the company you're with, and then collision. So let's talk about it. Let's start with the home, all right? So
Okay.
deductibles for a home. What is the deductible? Let's just throw a number out. You have a $500 deductible. You suffer a loss. Let's say you have a power surge that comes through the house and it fries all of your electronics. And once you've tallied everything up, you have about a $3,000 loss.
Okay.
What are you going to get for payment from the insurance company? $2,500.
Okay. So the deductible is the $500 out of my pocket, and they pay the rest.
Yes.
Okay.
So there's many ways. You know, it's your way of saying it's your risk. You're insuring yourself to a point for that deductible. That's really what it is. And deductibles are in play for numerous reasons. One, they're meant to be in place to prevent nuisance claims. Let's think about it. If you had a $0 deductible, you'd be like, oh, that's not working. Ding, ding, ding. Hi, it's me. I have a claim. So it's a way to kind of prevent nuisance claims. Another way deductible works, it's a way for you to leverage the coverage you have and the price you're paying. Because the lower a deductible, the more you pay.
Okay.
So
that's the part that gets me every time.
So and it's really, this is key. We're still just on the auto. The home. We're going to the auto in a second. But on the home, deductibles are, most companies have the lowest deductible of $500, but there are some companies out there, their lowest deductible is $250. There's even a few companies remaining that still have a deductible as low as $100. So that's the most you'll have out of pocket if you have a loss, which is nice. But remember, if you have the lowest deductible, you're not seeing a crediting opportunity or a savings opportunity by taking more of the risk on yourself, so you're paying more in. So if you have a $500 deductible on your home and you go and see, well, what's a $1,000 deductible going to do to my policy? It might save you a couple $100 a year. And over the course of a couple of years, that couple $100 will certainly offset that $500 deductible increase that you took.
Well, we'll go backwards then, okay? Because we talked about the amount of money out of your pocket, all right? And $1,000 once. Let's say once in 5 years something happens, right? Sure. Well, you saved.
Yeah, you have. Over the course of numerous years, you have saved. So when I'm quoting people, I often will give them different deductible options. And that being said, some companies go up to, you got $250, $500, $1,000, $2,500. Some companies go to a $5,000 deductible. Now, at some point, it becomes a moot point for you to continue to go higher, thinking you're to save a bunch of money. I've quoted people that have a $1,000 deductible, maybe a $2,500 or a $5,000 deductible on a homeowner, and only saved them maybe $8 or $10 or $20. At that point, the savings does not offset by any stretch of the imagination what you're taking on for, and another word for deductible I would call is a self-insured retention, where you're just saying, here's what I'll cover in the event of a loss.
Now, here's an interesting question, and I'm not going to stump. If you don't know the answer, that's all right. I'm sure you'll do some research like you always do and come in and share the answer with us. But if I, as let's say a homeowner, since that's what we're talking about here, okay?
Mm-hmm.
I say to you, Mike, I want full coverage on my house. I want a $1,500 deductible, okay? Does that to the insurance company look like I am willing to be more responsible? Is that how it works out, or
Not necessarily. There's so many other variables at play. Condition of the house, your insurance score, which is the consumer score. There's so many things. Companies certainly like higher deductibles.
Right.
They're not going to say you can't, but I don't know that it necessarily weighs on their impression of you. So that's a good question, but I don't think it's going to impact much.
Well, and the reason I asked that is because you went back and you talked about, hey, no deductible. I just lost my computer. I can't afford to buy a new one. That's obviously a fraudulent claim if something didn't happen.
Right.
So I was wondering if that made the difference.
If it flips. I'm sure it doesn't hurt, but it's not something that I've officially seen. And one more thing about the homeowner is there are some companies that the deductible you choose is the deductible that applies to loss to your home, loss to other structures, and loss to your personal property. It's the same, so once you've chosen that deductible, whatever it is, that's the deductible that applies to all of it. Some companies will give you an opportunity to go with a higher deductible for the buildings and a lower deductible for personal property. So maybe you have a $1,000 deductible for your home, and you could do maybe a $500 deductible for personal property. So that's nice, too, another way to leverage it. Going to automobile insurance. Remember, there are two components that comprise what we call physical damage coverage. So if you get a loan on a vehicle and you are required to carry physical damage coverage, it's going to be the comprehensive, a.k.a. other than collision, and collision. But my apologies. And those are both their own deductibles. You choose them. And I'll tell you, if you choose a $500 deductible for both, look at the premium. Look what you're paying. So for the comprehensive, you might be paying $87 a year. I'm just throwing numbers out there. For a $500 deductible. Collision, you might be paying $300 a year for a $500 deductible. Why is collision so much more expensive? Collision losses are bigger losses. Comprehensive is fire, theft, vandalism, impact with animals, glass claims, things like that.
Tree branch.
Yes. And many other things. Comprehensive really is what's not covered is covered. That's really, so if we don't exclude it, it's covered. That's really how it works. So it's worth looking at the options of, all right, maybe I'll go with a $100 deductible for comprehensive since it's a cheaper portion of coverage, and maybe go with a $500 deductible for collision. But just remember that, so the example I give, you're driving down the road and there's a deer in the road and you hit the deer, your comprehensive deductible will apply. Why? Because comprehensive covers impact with animals. So maybe you have a $100 deductible if you hit the deer. If you swerve and hit something else, anything else other than an animal, that's a collision. So now you went from a $100 deductible to a $500 deductible. You went from a non-chargeable, not at fault accident by hitting the deer to having an at fault accident by swerving and hitting something else. So these are all things to think about and ways to leverage. And one of the cautions I'll throw out there is be careful the deductible you choose on your auto, because that can really impact you. It kind of works with the life insurance thought, where the younger you are, the more you may want to have a lower deductible, because you couldn't necessarily, as a young family starting up, afford grabbing $1,000 out of a bank account if you have a loss. So a lot of the younger folks might go with a $250 or $500 deductible, or even less on an auto. As you get older, maybe it's time to consider what the savings could be, because you have a bank account that can sustain that type of loss.
All right. Now, see, I know I'm not the only one at fault with this, because I've had not many, but I've had conversation with folks about insurance. I've always used the deductible, no matter where it applies, to get my payment down.
Yeah.
Okay.
Yeah.
But now we know that that's not the best reason to do it.
No, it's certainly it's the leveraging component of how can we get the coverage I need, the deductibles where I think they should be, and save some money in the process.
So is it common sense then that one would think, okay, I've got a brand new 2018 F-250. Does it make more sense to have that higher deductible on that than it would to say I'm a 2008 Hyundai?
Lower the value of the vehicle, the less it's going to cost. So yeah, you may be so prone to go with a little bit of a higher deductible. Now, banks also have their thought on some of this, and some of them don't allow you to go higher. At some are maxing you out, I think, at 500. Some max you out at 1,000. So that's another consideration too.
All right. And these are all the things, these are questions that come up that you've been asked in the past, and this is why we talk about it with our good policy.
Absolutely.
All right.
Absolutely.
Tell them how to get in touch with you, Mike.
Sure. Give us a call, 748-5224. Visit us on Portland Street in St. Johnsbury or online at thebarrettagency.com. We're also on Google, Facebook, and YouTube as Barrett Insurance Agency.
And Tuesday mornings here with the Magic Morning Crew.
Yes, sir.
All right, buddy.
12:15, spring. Let's hope for some warmth.
The first day of it, we started out below zero. All right, there's our good policies this morning. Music on the way for you from James Bay.